Blake Hylands. I'm the CEO of Lithium Ionic. It's a hard rock spodumene lithium project in the Lithium Valley of Brazil, which is one of the largest up and coming and highest grade hard rock lithium belts in the world. We are LTH on the TSX venture. We are past the feasibility stage on our project. We are capitalized to get through an FID and be in a position to look to construct this project, expecting permit in the next few months to start building this project and producing almost 200,000 tons of concentrate per annum. So very, very excited to be one of the next near-term hard rock lithium producers in the world.
I'm Brendan Urich. I'm the CEO of Electric Royalties. We are a royalty company focused exclusively on clean energy metals, diversified across 9 different metals. We've already got 40 royalties in our portfolio, along with another 30 properties optioned out that should become royalties in the near future. We've got multiple royalties that are expected to enter production here over the next 12 months, with about a half a dozen of our royalties having major updates, regarding feasibilities, pre-feasibility too, over the next 12 months. So lots of good stuff coming, heavily diversified into clean energy metals.
Guys, great to have you on. We're going to talk today about battery metals. We're going to talk about lots of things, but first and foremost is about the state of the markets. The mood. It kind of feels like people are a bit bored of the battery story and they're going storming off to look at all things gold and precious metals. How are you feeling about lithium at the moment, Blake?
Well, I think that probably the volatility in price was, a bit nerve-wracking for some of the investing space. I think that, for a long time, when I was marketing this project and spodumene price had run to $8,000-9,000 a ton, I was cautious with our story all the time and suggesting, look, this is unsustainable. It's probably not going to be the long-term price. We need to think about projects that are low cost and high margin and high quality, and those are going to be the projects you're going to want to invest in. I think, like anytime something runs, a lot of projects take money out of the space. Some do well, some don't, and so you're in a sector that just sort of needs a little time to form its business, and let people kind of understand it a little bit better. Let price settle out a bit. I think we'll see it recover quite well here in the next while. Hopefully not too volatile again. So, it's not uncommon, I think, to see something pull back like this, see price pull back. But I look to a project like ours where, our all-in sustaining cost is about $500 a ton, and for spodumene, and then the product is still selling for $1,100-1,300 a ton. So there's good margins on a project like that. So ultimately, I don't think this is at all surprising to see some of the pullback. I think we'll see it settle into maybe closer to $2,000 at some point here and be a really healthy business again and more investable for the space. But maybe some of that early excitement out of it right now, worried about AI or gold or whatever it's into now, and we'll see it come back. So yeah, we'll just trudge on and keep building the project.
Yeah, well, we did renegotiate it a few times, 3 times, over the course of 6 months. We definitely took that into effect. But you look at this long term, and I think the picture is only looking better and better. Whether it's batteries for cars, batteries for energy storage, demand for lithium is looking at double-digit growth here, for the next decade or 2 decades. So, definitely at the beginning of a market, it's weird when prices go up 20x, right? That's weird. It'd be weird to expect them to stay there. You can imagine if gold prices went to 40,000, an ounce or whatever, 20x from where they are today, how crazy people would go. And so I don't think it's weird that it came back down. I think there's probably been a over sell-off in the space. Prices are still about double where they were, going back 4 or 5 years ago. So that's still a pretty good, boost. And I expect that you'll see more times like that for the lithium market coming ahead here for sure.
Okay. And obviously, I think, Blake, the other thing that must lend you comfort was the recent royalty financing with Appian. They've clearly got a long-term view on this. What were those conversations like?
I think that they were really interesting conversations from the get-go. This is not a traditional deal for Appian. I think it speaks volumes to our project and what they're looking to do. It's the largest sort of investment through a royalty in this belt, by quantum cash, and has a full buyback on it as well, which is really enticing. I think for us, we view them as potentially a partner going forward. They love the project, they love the district, they love the belt, and clearly, this is the royalty is a much smaller ticket size than they typically want to jump into, right? I mean, it's 20 million US. They typically want to come in at something that's 120 million US. So, we viewed their due diligence as thorough. Looking at our project, I think that's a huge check mark for us that we kind of stood the test of being due diligence, and certainly that they view us as one of the leading projects in this region. So I mean, it's big, not just bringing cash, but also just that validating factor of a group that's not always easy to satisfy from a due diligence perspective. They expect high quality work, they expect high quality projects, and obviously have a big footprint in Brazil. So we're excited about it. And as far as the royalty goes, it's not particularly punitive to the NPV of the project, and brings in cash that we can use to get to a position to fund the project. It's great.
But Blake, what they've got to believe though to do a deal like this, and Brendan will know this, we're talking about royalties here. They've got to believe that there's going to be a market for this. There's going to be a route to market where you can sell the product. That in fact you're even going to be in a position to have built the thing, produced whatever it is that you're going to produce to sell to the market. So it's about, I guess, on the everything you said, the asset and the team and the ability to raise finance to be able to move this thing forward to FID and then build it. But they got to believe there's a market there. So in terms of that aspect of that conversation and that deal that you've done, that surely should lend comfort to the retail market, looking in on projects like yours, projects like Brandon's, say it's going to be okay.
Yeah, you would think so. I mean, in essence, what they're saying is not just upstream, but mid and down, that there is a business here. I mean, this is a global company that has stepped in now and done an initial large lithium deal. I mean, clearly they're not doing that for a 6-month turnaround on what that means. I mean, this is a company that has a 10, 20, 10, 12 year outlook on their money, and certainly believe in a project that can be built quickly. So I think that anybody who, I'm sure Brendan has a good view on this too. And I mean, I think anybody who really looks at this space and looks at the growth, sees a gap, right? That there is going to be a supply gap here. That some of these sort of stories of many projects coming online and flooding the market are, I think, hollow. And the next few years are really going to prove that out. And so, high quality projects are going to, rise to the top. And I think that from our perspective, just get through this sort of little pullback, and the other side's going to be, bright. But yeah, I think anybody who looks at the space understands that there's going to be a ton of demand and a big future for lithium.
So on lithium price, when a market's this early, right? And so you talk about growth. So let's say a market is 1 million tons and you're expecting 10% growth. So, an extra 100,000 tons we're going to need next year. But when that market gets to 2 million tons and we're still at 10% growth, we need 200,000 tons of new supply that next year. And so that's really, at the early stages, one small mine comes on production, provides that 100,000 tons, all of a sudden the market swings, deficit, surplus, et cetera. But as you start to get bigger and that market gets bigger, which it is right now, all of a sudden you're needing much bigger mines to come online every year. And so I think, obviously the best of the best have already started to kind of get into production off this last price uptick. But, longer term, there's no way that we're going to fill that supply gap, when you look at the projects that we have available. So, over the long term, this is the new oil, I think. You look 50 years, over the next 50 years, this replaces oil slowly over time. Slower, probably a little slower, because the oil and gas guys like to keep around for, as long as they can. But that's where the world's headed, and I don't think anybody disagrees with that. So, you look how small the market is today versus, the industry that we're taking over, albeit over time here, and the growth potential, I think it's unlike anything you've seen, previously in the mining space.
But for you, Brendan, does that inform the way that what you target in terms of royalties? Because, some royalty companies just like to, we'll do anything. We're going to get the same multiple. It doesn't matter whether it's quality, not quality. We'll get into production, won't get into production. For you, looking at this market, as you've just explained, we're going to need more and more of this stuff, right? And your view is that, how do you go about selecting what goes into your portfolio and what doesn't? Because I'm very conscious of what Blake said. Perhaps there's slightly different quality of project out there.
Sure. So a couple things. So we actually pick the best assets in North America, Europe, and Australia that could actually be domestic sources of supply for these metals. And so the funny thing is, when you look at that, it's a really smaller market. So it's fairly easy, I think, to do a comparable analysis and say, hey, this is the best project for this clean energy metal in North America when you look at a subsect like that. So, we're definitely sticking to that geographical focus. There's so many gigafactories coming up under construction in those regions. There's a huge lack of actual critical metals mines, in Europe, North America, and Australia to feed those plants. So we think that's definitely going to, drive the longer term aspect of some of these projects coming in. So that's definitely a big part of it. I would say is definitely picking, those projects that are best of class in those jurisdictions. And the other thing is, we have 9 clean energy metals, which we target. We have exposure to all of them. We see the same opportunity, quite frankly, in most of these metals. I think lithium, copper, tin, those are very interesting ones for us. But I think this opportunity is really across the board. Lithium is maybe one of the better known, metals relative to, say, tin, which I think, tin prices are up to 33,000 a ton. They're up, 30% just this last year, and nobody's mentioned it. So I think there's a lot of upside really across the board for these metals.
So what's happened all of a sudden in terms of this narrative? Like as an ex-banker, we used to sit and talk about a critical minerals list, but didn't really kind of give it much sway or attention. We're just conscious that they're out. Now there seems to be a lot more pressure on governments to identify and secure supply. Because the market seems to have changed somewhat. You've got companies going upstream, investing in lithium companies. That's the thing you've both got in common here, lithium companies, but across the board on these metals. Yet the money's not flowing. The money's not flowing into the junior space. We're seeing mergers of equals, nothing flowing down to juniors. We're seeing government incentives, whether it be tax credits, etc., but it's not flowing down to the juniors. And I take your point, Brendan, all of the battery metals are behaving the same way. So it's the same problem across the sector. Something's got to give here. So what's going to change? What needs to change?
Yeah, it's a great question. I mean, it does feel like a lot of money is just on the sidelines in general in all sectors. I mean, it's not just in the battery sector. I think that, to be totally honest, I mean, take a macro comment down to a micro, we actually aren't seeing a massive sell-off in a lot of us. It's just that when selling comes, there's no buy side to kind of drive it back up as well. And I think that there's a bit of a wait and see mentality, I think, just probably due to, volatility or what's going on in the world right now, or an election in November, or whatever that happens to be. I think it's just a little bit of money on the sideline right now. And so as opposed to, I think, a general massive disbelief or sell-off in a space, I think it's just people are kind of waiting a little while to see, okay, what is the business? What does it look like? What are the projects? What part of the world are they going to come out of? There's these kind of black box theories around, what's going to come out of Africa? What about regions we don't really understand? What are the Chinese doing? I mean, these are always tough questions, I think, for, broad investors or resource investors to pin down. And I think as some of that starts to get flushed out and the reality of the situation kicks in, the gap is there, we'll see people jump back into the space. My hope would actually be that it's not as violent an uptick as last time, and we just see sort of more of a gradual set into what the real business is going to be, and that's one where the downstream can still make money on the margin, and the upstream is going to do profitable business as well. But I haven't seen the sentiment be negative on the space or not want to be in the space. I just think there's a general sort of malaise in the market right now.
Yeah, to Blake's point, I think a big part of it is really the opportunity because there is no buy side, and the liquidity is very weak. So, I think we were up 7% yesterday off 60,000 shares trading. You know what I mean? And so it wouldn't take much for this to be like a whole different story. But when you do have sellers and you don't have buy side waiting for it, your price can ultimately drop 10% off of 25,000 shares trading, which is has nothing to do with your value, and it's a totally separate thing from the assets that you hold and where the company's going. So I think that is a really big aspect of it. Never mind, it's also summertime, but I think that's the opportunity for retail investors to really go in and pick up some of these stocks that are super cheap ahead of springtime.
It's funny, Brendan. It's becoming there's summer, there's Christmas. There's tax loss. There's like a 3-week window for us to run business these days.
I know it feels like it's getting shorter every year.
Yeah, that's right.
Yeah. Well, I think it's supposed to be 3 years of the normal rules not applying, quite frankly, with COVID, etc. And I think maybe we have to accept that retail investors got a lot less disposable income and discretionary spend available to them. So there's a little bit of that going on, not to mention the sort of crushing losses that perhaps some people have had to take along the way. So maybe there's a slight new paradigm from that regard, psychologically. But I'm kind of with Brendan on this one. It's like, if you're a contrarian investor, if you've got the balls to be a contrarian investor, there's some deals to be had. And I guess the question for you guys is, and you both hinted at it, not all projects, not all companies are born equal. There's still a lot of not so good things out there. So what are you looking for when you're investing? Brett, Blake, on. What do you think?
Sure.
Better not name names, but just
specifically. Brendan, you go, and I'll.
Yeah. Well, we've done quite a few deals. Now we're diversified across 72 assets. We do, go after 9 different clean energy metals. So we are definitely aiming to be diversified. And so, I think if you look at our portfolio, if it goes 10% right, we're doing great. Especially at this valuation. So. Diversification is a really big key for us in terms of investing. I think it's really hard to say that any certain one project is going to work out just because it's very difficult to mine. There's so many things that are outside of your control. So diversification is definitely key. Looking at the management teams, though, and those best-in-class projects. So, really comparing, what is actually out there to invest in. The problem for most retail investors is that can be very complicated. I've been looking at projects and, all over the world basically for 12 years now. So, we've got a team of people that's also likewise done that, many cases longer than I have. So it can be tough for retail investors to kind of sort through that, but we do a very deep dive on the technical side of things. But, looking at management teams is always a good one. And then, trying to be diversified. So, sticking with multiple assets instead of one shot at the can.
Yeah, look, I think that anytime I'm looking at a newer space, I would consider this a newer space for most investors. I look for simplicity. I think things that are, straightforward, don't require anybody to, reinvent the wheel or do something that hasn't been done before. I tend to like to jump into that stuff early. And I think that while new technology and new science are going to drive a lot of these businesses in the future, I think near term and short term, I certainly look for things that are simple, low cost, easy to kind of jump into and see a clear path forward. And, tag that onto jurisdiction. I think those two things are key components for me. I'm a technical guy by background, so I could jump into a lot of it. But generally speaking, I think when I look at projects like that, I look at let's minimize how many things can go wrong between, here and production. So, those are things when I'm certainly in a new space that I look for. And I think
simplicity is a good one.
There are a lot of those out there, there's good ones.
Simplicity is a really good one too. Yeah. I mean, definitely don't look at groups that are trying to create new technologies just so that their project works, because that's more of that's not even a mining thing anymore. That's a science project on the side. So there's a lot of technologies out there that are in the works. Like Blake, I do believe these things will work out, some point down the road. But sticking with stuff where they don't have to invent something new, just to make something work, I think is definitely simplicity is a good one.
Yeah, I think so. We saw, I think it was a couple of years ago now, a project where a copper company was trying to use ISR as a new means of extraction. And new, innovative, didn't work.
In copper?
Copper.
Yeah, yeah, because they use that in uranium, and I've seen a few copper groups that have tried that. There's one, I think, actually right now going in construction. So it is interesting. There has been a few, in situ leach copper mines, but not too many.
Not too many that made money, that's for sure. Okay, well, look, let's talk about some of the things that are available to you, given this new world we're looking at. Obviously, you've just done that, like you did the Appian deal, but you must have looked around at alternative financing, Blake. Say, well, come on. We need to kind of shore up our balance sheet. We've got a great project here. We want to kind of get on with stuff rather than sit back and hunker down. What are the options available to you, and what are the sort of types of groups that you spoke to before you kind of settled on Appian?
Yeah, I mean, we talked to all of them. I think there was maybe a misconception in doing a royalty as well from some some investors was that, this was the kind of money you could get. I mean, there's lots of money out there. I mean, I think the investment space is still very much there. They're just not jumping into the market to push stocks one way or another. But I think along the way, if we pick the route of just sort of bringing capital in from an equity perspective, that was always out there in front of us for the kind of smart long-term investors. But for us, we wanted to do something that was or certainly less dilutive, and that was really driven largely by a focus we've had for quite a few months, and we've looked at every path, whether that be sort of offtake. We looked at different kind of convert options and royalty options, and ultimately, we settled on sort of a simple royalty plan, and it just took quite a long time to get across the line because of extensive due diligence and the work that had to go into it and the value that was being created. So, I think for us, we are in a place now where, as that closes, we can kind of jump back into, the project financing discussions. And from that perspective, with pricing pulling back, yes, some of the excitement from some names have come out, but really the long-term investors, the off-takers and the debt financiers and the partners are still out there looking. And I think that, the bold ones are going to pick up really good projects or, invest in really good projects now. So, we're having those conversations and had those conversations for months, and continue to. But I think for us, we have to look through the market now here a little bit and obviously push through to be a producer as soon as possible.
And this market's perfect for royalties. It's custom built for companies when they're undervalued, to go in there, because you have to write a big equity check when your valuation is where it is. And that can really, eat away at what part of the project you get longer term. So royalty is really custom made for these markets. I think there's a lot of opportunities out there. I think, we're definitely going to be heating it up a little bit in terms of some of the deals that we're able to go after, especially over the summer here, because there is a lack of capital, I think, out, for certain situations. And definitely, I think, groups like ours can definitely help plug that gap, in the foreseeable future.
Yeah, and just the appetite for the company to issue that equity at those. I mean, we, as our example, we went from $2 to 65 cents. We don't want to issue a bunch of equity at those levels. So yeah, Brent, I think that's very much right. Like for a project, if it can make sense and not be too much weight on it, and work with a partner that it is truly a partner long term, I think it's a great way to solve some of those issues in a market like this for the corp.
I would never have given you a full buyback though. That's a good deal. Where you can totally eliminate the royalty. You never would have got that with me, but well done.
Yeah, we're pretty happy.
Well,
with that.
actually, to your point, Brendan, I mean, it kind of works both ways, right? In the sense that the type of money that's available to you will help inform and shape the types of deals that you do, because you're not going to kind of rush to do a convert if your whole portfolio is, long view, i.e., you're not going to get any revenue from them for 5 years. So you're going to have to get that balance right just to be able to kind of support the type and the mix of the financing available to you, no?
Yeah, we've been super lucky because we've got a very supportive shareholder who's basically given us, a $10 million facility that's one of a kind. We have no payments on that really for the next 4 years. It's all convertible into shares at a much higher share price, over 200% from where we're at today. And so, yeah, over that time frame, we feel very comfortable. And so we still have $3 million left with them to go out and do new deals. But at some point here, hopefully the market will reevaluate us and, it'll be a little bit easier to raise equity because, the whole reason we're using that is our equity price. We also feel, is way too undervalued to be raising equity at these prices. But we've been very lucky to have, like I said, this very supportive shareholder, Stefan Gleason, supporting us. But not every group has that out there. And we're not going to have an infinite amount. So we will have to, address that here in the near future. But I think if you look at what we've done in the past, bringing in co-investment from other groups, there's a lot of private money that would love to be in royalties. But funnily enough, they just don't invest in public royalty companies. And so I think there's a lot of money out there for us to put deals together and for them to kind of come in and finance that, as long as they're getting a piece of that deal.
Okay. Look, guys, I think there's a general, I don't know if it was in your mouth, it seems to be patience is required, quality, go after quality, and perhaps the markets will be okay. It just, at the moment, people are waiting for whatever signals they're waiting for. I suspect the US election is a pretty big one. Guys, why don't we kind of wrap up? Maybe give 2 minutes to each of you in terms of your elevator pitch to investors looking and listening and reading about this. As to why they should pick up your stock. Do you want to go with that, Blake?
Yeah, absolutely. I think I've sort of quietly been plugging myself all along here, but I think lithium ionic.
That's the idea.
Yeah, I mean, simplicity. No, it's really, I mean, it's about lithium ionic. It isn't a belt. A very unique belt in the sense that from the rocks up, it really is only comparable to Western Australia. And so when you look at that, it's a massive opportunity. One project now producing in Sigma at scale. We've already got a 30-year producer in CBL. There's proof of concept all around us. And if you look at discovery rate from the companies that have moved in the last 2 years, I mean, I think we're at something at 10 or 15,000 tons a month of ore being discovered at this point, and that's all with pretty limited drilling so far. So it's really probably bias aside, one of the most important hard rock belts developing right now. And tack on top of that it's in a state in Minas Gerais that's a mining state that's highlighted this as a key area to develop, and lithium being a key focus for that belt as well. So complete, a very supportive government, a very supportive social situations. These are small footprint projects, so their permit timelines are quick as well. Knock on wood, but right now we have a good line of sight on a project that could be up and running in 2026. That is high grade, low cost, low cost to build, and high margin even in these kind of pullback prices. So for me, yeah, I think your point about being patient in this space is right. I think that the savvy investor who has the guts right now is going to do very, very well on projects like this and many projects like this that are out there. But yeah, I think right now it's a come show us kind of market, show us what you're going to do, and we're going to have to just continue to do that. So it'll be an exciting few months ahead of us.
Yeah. So we're a royalty company, right? So, I mean, we have 40 royalties. We don't have to put a single dollar in towards development. Those are all going to march towards production at no cost to us. And so, you look at our portfolio this year, there's 4 of our royalties, which, have the potential to enter production and start paying cash flow to us. If you look at over the next 5 to 6 years, we see that portfolio getting up to 20, 25 million a year in cash flow annually. And that's about our market capitalization today, So I think if you look at the valuation opportunity right now, we're extremely cheap. I'd say we're low risk. We're very diversified, right? We've got 72 assets. G&A is very low. So, it's about $1.5 million a year. 1 or 2 of those comes on, we're cash flow positive. And then, we don't have to raise any money. And it's really just kind of golden from there. So, I mean, you look at the opportunity, we're very low risk on the downside. And I look at the pricing upside across all of our metals. If prices go up, our revenues go up by the exact same proportion. It's one of the beauties of the royalty company business model. So definitely where we're at today is a good entry point. We have a ton of different catalysts expected here over the next 12 months. So investors definitely shouldn't stay on the sidelines too long.
Guys, appreciate your time today. Thanks very much. Bye.